Despite U.S. GDP turning negative during the first quarter, Chicago's industrial market continued to perform through the second quarter. The industrial vacancy rate decreased by 20 basis points to 8.1% between April and June, a rate 60 basis points below where it was a year ago. Nearly 5.7 million square feet of vacant space was absorbed during the second quarter through leasing activity, user sales, and construction completions. This is nearly 5 times the amount of vacant space that was absorbed last quarter and the highest quarterly tally since 2007. The industrial vacancy rate is now a full 4 percentage points below the 12.1% peak reached in 2010. 55 million square feet of vacant space has been absorbed in that time. Joining us today to discuss the industrial market is Larry Much, Executive Vice President at NEI Hiffman.
The Chicagoland market has experienced its 16th consecutive quarter of positive absorption. 77% of the absorption that occurred in the second quarter occurred in 3 sub-markets. The I-55 market absorbed roughly 2.7 million square feet. The I-80 market absorbed 975,000 square feet. And the Southeast Wisconsin absorbed roughly 755,000 square feet. The O'Hare submarket was one of only 4 submarkets that experienced negative net absorption during the second quarter, adding 320,000 square feet of vacant space to the market through new vacancies. The largest lease completed during the second quarter was Ferrara Pan Candy. That was 747,152 square feet located at 901 Carlo Drive in Bolingbrook. That space was recently vacated by Home Depot, which relocated to Joliet. The largest sale that occurred in the second quarter of 2014 actually occurred in the I-57 market. It was the sale of an 825,000 square foot industrial building from Exeter to W.P. Carey. The property is 100% leased to Smuckers. Construction activity continues to increase. Market-wide, nearly 3.6 million square feet of new product was delivered during the second quarter, and 11.3 million square feet is currently underway, the most construction activity the industrial market has witnessed since 2008. 52% of that activity is speculative, 44% of that activity is build-to-suit, and 4% are additions. A big concern in today's construction is deliverability of product. Last year, for example, precast timelines were roughly 30 to 60 days. Today, we're seeing delay times as long as 6 months. Costs associated with construction also are beginning to increase.